Here's a longer term view. You could look at this, a long-term outlook of strong dollar cycles. I think for those of you who haven't seen the dollar across the last 10 years, and I do find that in meetings that we're in, there are plenty of analysts who've only been, maybe not, certainly not the PMs and CIOs and many people who run the firms, but there are a lot of analysts who've only been in this business in the last 10 years of this reflating the deflation using the dollar. That's what they know. But if you're a 40-year person, a 40-year student of history, at a bare minimum you'd respect that the dollar can go up in a very violent fashion, which is in the 1980s with Paul Volcker, or it can go up gradually like it did in the 1990s and move into a crescendo. I think that that's the more likely scenario now, if only because you're coming off a 40-year low and it's just this gradual climb up. And a lot of people whine about it. They just whine about it. I've never seen so many people in my, and I'm Canadian for God's sakes, so many people whine about the dollar. You get paid in dollars. The value of what you get paid in is going up. At a bare minimum, you're going to understand that. And then they're like, well, that makes sense. But you got like all these guys in old wall media, they're talking about like 16th century economics. Oh, it's going to hurt exports. Exports like 13% of the economy. This is a service economy. And you get paid in dollars. I think you get it. There's a very strong correlation between sustained economic growth in the U.S., rising rates, rising dollars, and falling, again, real costs of living. So again, that's why real purchasing power goes up and real GDP goes up, as opposed to this effervescent hope of demand-based QE economics for, again, some kind of the illusion of growth or nominal inflation as growth.